How has the Russia versus Ukraine conflict affected my 7-figure investment portfolio?
I'd like to say that this video is not going to be monetized. I'm not trying to make this video in order to get views.
This video is kind of a joke, as you can tell by the 7-figure. I know it's a sad situation with what's going on in Ukraine. I'm not making any sort of money from this, as my channel is not even monetized. I just want to document my thoughts and experiences in the time that we're going through currently. So please don't dislike the video. Just before I show you my portfolio, let's talk about how I started investing. It all started in January of 2021. While I was watching a Graham Stephan video, I got recommended a Meet Kevin video. Meet Kevin at that time and currently uploads multiple videos a day purely about the stock market. Now, I remember being about 9, going on holiday to Poland. My mum exchanged English pounds to Polish zloty twice while on holiday. The second time, she got more Polish zloty for the exact same amount of English pounds. This confused me, so I asked her why that was, and she said the prices fluctuate every single day. Now, I know that is called Forex, the foreign exchange market, which I have no interest in now, but at that time it was interesting to me that you could make money by trading. Right when I saw that Meet Kevin video about, I think it was the stock market just flipped, that memory when I was 9 years old popped into my head. I clicked on the video and I was intrigued. Meet Kevin was throwing around all these numbers. He just brought $600,000 of a firm, $18 million portfolio I think at that time, just crazy. And he was also doing market open and market closing live streams, where every single day the stock market was open, he would say market open, oh Tesla's up 1.5%, buy the dip. Buy the dip, buy the dip. And I started getting really interested into this. So I opened up a Trading 212 account. Now, while I was watching Meet Kevin, I also watched Andre Jake's videos of dividend investing. So I started off by depositing £100 into my Trading 212 account, and I brought into a pie called Almost Daily Dividend. This consisted of a bunch of dividend stocks, and every single day was a dividend of 1p from £100. After about 1 month, I got bored of this and started buying penny stocks. And you guess how that went? Not very well. I then discovered Wall Street Bets. This was about May time, as the whole GameStop thing was going on. And just after GameStop, about June, Context Logic, Wish, stock started trending on Wall Street Bets. So I deposited another £500 onto my Trading 212 account. And with my £1,500, I brought into Wish at $11.73 a share. I then watched it rose up at 1.20% in a day, up to $14.73. Now, I remember when I brought that stock, I wrote down on a piece of paper, this was my only stock bearing in mind, don't sell, even if it goes down by half. Don't sell, only sell when it's $30 plus per share. What was I thinking? Anyway, it went up 20% in one day, up to $14.73 per share, and I still didn't sell because that was not for me at that time. 35% in total over 2 weeks. So anyway, I kept holding that £1,500 in Wish stock, and as any meme stock or momentum stock, it slowly died down and it kept dying down. A couple of months later, I ended up selling out of the whole position at this price per share for a huge loss. If I would have not sold and kept invested into Wish, I would have been in an even worse position. Look at the stock today, $2 a share. Even after this terrible experience of losing 56% on Wish stock in a short amount of time, I deposited money. My total account balance was £3,100, somewhere around that. I then brought £2,000 worth of Twitter stock at $63 a share. This is the share price today. $30. Would have halved my money. I ended up selling Twitter stock pretty quick in about a week's time for about a 8% loss. What did I learn from this experience? Nobody can make money from trading, and there's got to be a better way to invest. So I did some more research and came across the S&P 500. Graham Stephan has always been talking about the S&P 500 in his videos, and I decided to delete Trading 212 and install Freetrade. The reason why I installed Freetrade is because I felt like Trading 212 encouraged me to trade too much, and also Trading 212 had CFDs, Freetrade does not, so I installed Freetrade on my phone. And here are the results. I'll go into the max. As you can see here, started 15th of October 2021. This is at the time I deposited just over £1,500 into the account, and I plan to just invest into the S&P 500. Here you can see it appreciated by £100, leaving me with £1,640 in the span of a couple of weeks. So I invested another £5,000, leaving my total at £7,000. Then slowly kept throwing in £1,000, £2,000, until eventually at the peak I had £11,433. Now if we go down to the 1 month chart, you can see that today I am down £683. Today is Friday, 25th of February. As you can see here, most of my money is in the S&P 500 with 181 shares. And recently, 21st of January, I brought a all-world ETF. Very small amount. Here where you can see the little green moving dot is where it was announced that Russia invaded Ukraine, dropped from £10,736 down to £10,487. And for some reason, just the next day, it rose to the same level it was at. My guess is Russians sold out of their stock market because it was down 45%, and they brought into US stocks. Since then, it has increased so much. My thoughts of this is, I'm just going to leave this money in here for now, as I don't really need it too much. I'm not going to invest any more because I have a business to run, and I can use that money more effectively. Now, what are my current thoughts? I'm going to leave this money in for now. I'm not going to deposit any more because I have a business to run and I can make more money from that. Once the S&P 500 recovers up to that initial amount that I already put in, I will sell the S&P 500, all my shares. I'll open up a Vanguard ISA account and I'll put all the money into the All World ETF. The reason why I don't like the S&P 500 is over 30% of the S&P 500 is in growth companies. I'll prefer being in an all-world ETF because that is more diversification. Like I said before, I'm not going to invest any more money into the stock market for now because I have a business and I want to buy a house soon, video coming soon. So I've maxed out my lifetime ISA, which on £4,000 deposit, which is the max, gave me a 25% bonus of £1,000, £1,000 free money towards my first house. Also, dividend stocks. I don't like dividend investing. I understand it's a decently good model, but dividend investing, you'll be holding about 15 dividend stocks, which is not enough for my liking. Too much money in one stock. For example, if you have a £100,000 portfolio, you might have about 6 to 7 grand in each stock. I recommend you don't invest into any stocks unless you already have a high income or a successful business. I recommend you take whatever money you planned on investing into stocks and use it to further your education. Maybe try and start a couple businesses, as this will make you a lot more money. Once you've got this high income, the first thing I would do is buy a house. In a lot of cases in the UK, you can get 100% return on your money with real estate. Video coming soon. If it's already up, there'll be an iCard here. 100% return. What do I regret? I regret buying the S&P 500. I would much rather buy an all-world ETF. I also regret not investing sooner. I should have just gone straight into total stock market index funds in January 2021, but at least I learned a lot. Also, a quick note, what I've noticed with a couple of young dividend investors is they go from dividend investing, which is reasonably sensible, they slowly transition into a gambler. There's an example of this. Now, I'm not hating on the guy, but it's just my opinion really. But there is a YouTuber who's 22 years old, I think, in the UK. He used to do dividend investing, and now he's pretty much all in on one shitty stock, which he's down heavily on, I think 70%. He's got a little bit of other stock, but most of it is in one stock. For him to break even on his initial investment, the stock will need to increase insanely because it is down so much. So please don't go picking individual stocks, even if it is dividend stocks. As say you've got 15 dividend stocks and eventually a $250,000 portfolio or even $1 million. Do you want so much money in an individual stock? No, it's a lot better to have it in real estate and a global index fund. So that's it for today. Thank you for watching. All the usual, like and subscribe. Again, please don't hate on me for this video. I'm not using it to make money. And yeah, check out some of my other videos on how to make money online. They're all so far about eBay because I believe that's the easiest method. And yeah, thank you for watching. That's it for today. Why not check out some of my other videos? Adios, amigos.